So we have Jon Najarian, Market Rebels. He's going to be here. He's already here.
There he is.
Leave it to the Benzinga events team to no cue necessary. So, yep. John, I saw you backstage. You're partying a little bit. You got a cup of coffee, and I'm pretty sure I saw you with a jar of peanut butter. Caught him red-handed. The man.
Oh, I love peanut butter.
All right. Yeah. So
that's the only carbs I get, man.
I like your style. All right. So guys, give us a 1 in the chat if you like peanut butter. 1's in the chat if you like peanut butter as a yummy snack during the trading day. We got the thumbs up from Mr. Najarian. And I just want to give a little bit of an intro. So, John, you and I spoke a couple days ago. And I got to tell you, some of the things that you were talking about doing with cryptocurrency gave me like some aha moments where I was like, oh, you can do that. Like that kind of thing, like exciting stuff. Like a lot of what I'm doing is just very directional or static, as our previous speaker would put it. So I'm really excited. And the ones are coming in. Like Swifty loves peanut butter. We all know that. We all know that. Born to be free. Absolutely. Bald Eagles, peanut butter. We have great representation here. Nutella peanut butter, Dylan. Little funky. That's okay.
Yeah, little funky.
All right. So, I'm really excited for the stuff that you're going to talk about. This situation is totally freeform. We've got a bunch of investors here. We've got a bunch of traders, and we got a bunch of folks that are just interested in like blockchain and the actual tech side of how this will evolve the economy, how this will evolve other in like industries themselves. So there's a lot of ways we can attack this. And I know that you have a little bit of a presentation, and I also have some questions that I'd like to ask you. So why don't we just start off with some introductory questions, and then we can roll into some of that content that you have ready for us.
Love to do it.
Okay, so I'm just going to go to absolute beginning. And I want to get you've been in the market for a long time. You've been on the floor. You're an options guy. You have a lot of experience looking at financial markets, and you've seen a lot of evolution over decades. So I want to know from the unique perspective like your own, what was your first intro to cryptocurrency? And if you could walk us through the evolution of your attitude and perspective toward it.
Sure. Well, Neil, it's a pleasure to be here. Thank you very much to all of you for tuning in on the Benzinga Network. I first traded it probably in 2016 and ran away scared because it moved too fast.
Yep.
It was just crazy. And that was when it was in the hundreds of dollars. Mm-hmm. So I wish I could say right now that, and we wouldn't even be talking if I did. If I did just hold on to all the coins I bought in 2016, we wouldn't be talking now, Neil.
It goes both ways, bud. Both ways.
But nonetheless, I had and it wasn't a trial by fire. It was that I just couldn't believe my good luck on that given week that I bought some coins and how quickly they moved. So I backed off because I'd been reading about all these people, about hacks and this and that, about, software wallets, hardware wallets, and all the rest. Yeah. So I backed off. We were also in the process of selling TradeMonster at that point, which we sold to E-Trade. Don't need to get into that, but because of that, it took my focus off of crypto for a while. Then in 2017, there's a brilliant lady on the Fast Money show named Karen Feinerman. Mm-hmm. And her brother is also a trader. I think he was a hedgie as well, a hedge fund manager. And one of his best friends was Peter Brigger. And at I think it was a fundraiser for Lyme awareness and so forth, Lyme disease, he paid like $10,000 or $20,000 to have dinner with my brother Pete and I in New York and get a tour of CNBC and all that. And he did it not because we're anything great, but because he was a generous guy, still is. And his sister was obviously involved with CNBC. So anyway, flash forward, we're having this dinner with Peter Brigger, who is, of course, the chairman, the founder of Fortress. And he's telling me, Jon, you got to buy and just hold. He didn't say hodl. He said hold. And he said, put it in a hardware wallet, take it offline, and just don't look at it for a decade. Mm-hmm. And so in 2017, that was September 11th, 2017. I know it was September 11th because, of course, that's a date none of us forget. Mm-hmm. And it turns out that actual day, he was at the filming or at the live shoot of Fast Money. And so we went out to dinner at the Hunt and Fish. He convinced me I should be in. So that's how it happened, Neil, that I got in. Since then, I'd say an awful lot of traders. You just had a friend of mine, Tom Sosnoff, on. Mm-hmm. An awful lot of derivative traders like me and like Tom Sosnoff have looked at crypto and said, oh, my God, the edge here is huge. The fact that people are trading on technicals almost exclusively, fundamentals and technicals. The fundamental part we could argue about perhaps, but the technicals, people really focus in on that. And for my money, a lot of people don't take into account the risks in the derivatives. And for that reason, it creates huge opportunities, Neil. So I think an awful lot of former floor traders are upstairs, and there's no edge in trading options on Apple or anything else anymore. I mean, many of us position ourselves using like our algorithm, our heat seeker algorithm. We'll position bullish or bearish, but when you talk about crypto, you get real edge. And that's what we all loved when we were on the trading floor. And crypto has the best edge of any asset that I've seen in the last 20 years.
So there you have it, guy. That is a powerful statement. So I wanted to ask you, it's the best edge. How has cryptocurrency and what you're able to do with it currently changed the way that you look at the financial markets, like in the pre-Bitcoin days? Like what does that look like to you with hindsight?
Well, it's, you know, when I was first on the trading floor, we had 4 U.S. options exchanges: San Francisco, Philly, Amex, Chicago Board Option Exchange, which was the first and biggest of all of them. And then the ICE came along, the International Securities Exchange. And that was all electronic. There were no traders, per se in pits and so forth. So we have grown now to perhaps 16 options exchanges since 1981 till now. But when you look around at how many derivatives are traded around the world on these crypto exchanges, it boggles the mind. Not only are there 11,000 coins out there that people used to call altcoins or shit coins, but there are now dozens of exchanges from Deribit and FTX and Binance to whatever, where you can trade with up to 100 to 1 leverage. And when you're talking about exchanges, that diverse offering of exchanges creates opportunities. I don't arb one exchange against another because, quite frankly, that's this much edge. I'd rather really pile in, Neil, to where the real edge is, and that is when people are caught leaning too long or too short. And we've seen both play out in the last 2 months. Absolutely.
So for our trader audience / investor, could you dig into more of what you mean by that? Perhaps from like a beginner intermediate perspective, what exactly is that edge you're talking about?
All right. Do you mind if I put up some slides? Because I think they'll show it better than me.
Perfect.
Or at least it'll help in the description. Yep. So I'm just going to pull up the slides right now, folks. Give me just 1 second. Let's see here.
Yeah, and you'll want to go to the bottom of your StreamYard screen, like zoom again to share again. It's in the bottom middle.
Oh, that didn't go up. Sorry.
It was up and it's gone. I don't know why.
All right, I'll do that again. Let me see. Here, share, and now it's sharing, and let's present. So is that up there for you, Neil?
Boom, we got it.
Cool. All right. So I don't need to belabor that. That's just a sexy Bitcoin screen. This is also just a screen that I frequently use to describe trading in Bitcoin. And these are the ones I want you guys to concentrate on. So if you're a long-term trader like me, this will be my 40th year in the markets, by the way, because I started in 1981 here in Chicago. So I'm older than most of you, but crypto futures saw a record $10 billion worth of liquidations on Sunday. That was a headline from CoinDesk. What does that mean? That means that people were over-levered. How were they over-levered? Well, maybe they, instead of just trading with the 5,000 or 20,000 in their account, they levered that up 10 to 1, made it trade as if it was 200,000. And they're getting too long, for instance, or too short, because it works both ways, and I'll show you that. When that happens, that's when I'm really putting on big derivatives positions. Here's another example, 900 million in crypto short positions liquidated as BTC breaks 39,000. So that's after that first one was an example of when people were leaning way too long, and they're either doing that by being short puts, bad idea, because you're already getting leverage with a derivative like a call or a put, but when you're also getting 20 to 1, 50 to 1, 100 to 1 leverage in the actual coins or futures, that's exceptionally dangerous. And that first screen with the 10 billion liquidation, that was longs. This one that you see here, this was for shorts, because after the June, tsunami passed, we went from 29,000 through 39,000 like that. And that also was a squeeze, and it took out a lot of the people who were leaning short in either short calls or short Bitcoin. So I wanted to show you this one, Neil, and then I can get into the nuts and bolts of why I pull the trigger on these trades. So look at those exchanges. This is BTC, Bitcoin Open Interests. And you see that Deribit is where all the volume is, really. I mean, max 8 billion, last 7 billion. These are open interests. Look at that compared, for instance, to the CME, 253 million. When you're talking about 7 billion in open interest versus 253 million in open interest, you're talking, 25, 30 times more open interest over on Deribit. And then you look at places that some of you trade on, I'm sure, LedgerX, Bit.com, OKEX, all of these, they're all in the same relative space as the CME. And the big one, of course, is Deribit, which was one of the first with decent options. And this one is option volumes. And again, you're looking at Deribit, where you see $1 billion, average 554 million. These are option volumes, folks. And you compare that again to the CME with 33 million or 11 million, those kinds of numbers that you see across the bottom of the screen there. This is not me making fun of the CME. It's just a fact, though, that they have a lot less leverage, so they're a lot less attractive to many of you in the audience because you can't trade them as big. You can't make that $20,000 trade like 200,000 or even $1 million at the CME. Can't do it. So that's when you look at those volumes there, Deribit just dwarfs everything, right? Everything else is just that little top piece on there, and Deribit is the big one. All right, so this is the clue for trading, I think, Neil. And this is the same thing that my brother Pete and I do all the time. This is what we did when we were traders on the floor as well. We talk about 3 V's: volatility, volume, velocity. All 3 of those are really key to making trades like I do and like my brother Pete does. So look at that. On 620, the volatility of Bitcoin was 103, which is like 6.3%, 6.4% or whatever. But to take it into the same parlance that we use when we're talking about the VIX, when I say the VIX is 16, as it was early this morning, that's versus 103 for Bitcoin on June 20th. Then look at how rapidly it came down from 103 to 52. It gets cut in half like that from the end of June through the end of August. I had that data through yesterday. So now it's like 3.3%. And again, all of you know that 16 is what we use as it's the square root of 256. And that's the approximate number of trading days in a year and so forth and so on. So virtually every pricing model is using 16 as a 1% move for the VIX or for Bitcoin. Doesn't matter. Now look at where we were in Bitcoin when June 20th was around. 29,150. Pull it up on your own graphs if you don't believe me, folks. And then look at how rapidly we moved to 50,000. So again, my triggers are volume, volatility, velocity. It met all three, which meant that when we were trading at, let's say, 30,000-ish, between 29,000 and 30,000, volatility was extremely high. What do I want to do when volatility is high? I want to own the asset and I want to sell those pumped up options because I think they can't justify a 6.5% volatility or 102 in VIX terms. So look at how well that worked out. And this happens time and time again. So what do I do when we get into a situation like that? I am long the underlying, short upside, which is basically, if you want to view it as a covered right, Neil, or anything else, that's as simple as it gets. I'm taking that really pumped up premium out of the Bitcoin options market and putting that premium right in my pocket. And what I might do as well is put on spreads in there where I'm buying at the money calls and selling twice as many out of the money calls. But I also have long Bitcoin. So that's one of those trades that I've done for years. We call it a stock replacement strategy and so forth, or a repair strategy where you've got a stock, it's fallen down, and instead of just getting out because the setup is too good, I buy the at the money along with the underlying. So now I have two underlyings, if you will, and I'm short twice as many of the upside calls against the calls that I've purchased. But I'm not short net anything because, again, I have the underlying as well. It gives you a turbo between the strikes that you've picked. So between basically 30 and 42,000 or so, we killed it to the upside as vol came down and as our underlying ran to the upside. So those kinds of gifts, that's just, I can close this out now. Check it out at marketrebellion.com/get started.
Go there, guys. I mean, so John, I just want to jump in and say that is just a glimpse of what we talked about, which I would say, guys, give me a one in chat if you knew that you could use options trading techniques, tactics, strategies with cryptocurrencies. Give me a 2 if this is completely new and your mind is blown. And they're on a 15-second delay, so we're going to wait for that 15-second mind-blowing experience.
Cool.
So, John, we are at time. I want to thank you very, very much for coming on here with us. And I want to really implore everyone to get on over to marketrebellion.com. The link is on the screen. We'll drop it in the chat so you guys can follow up with what John and the rest of the folks at Market Rebellion are doing. So, John, thank you. It's been a great pleasure.
Neil, my pleasure. You guys are putting on a great show. Thank you, sir.
Thank you very much.